Hello, everybody. So today I want to talk about HIMS raising $870 million at 0%. They just raised that amount to go global. And among other things, they're also going to work on AI with that money. So let's go through this video. First of all, let's begin by saying that HIMS absolutely cannot do a new share offering. They are way too undervalued. They know they're too undervalued. They have a buyback program for $50 million still in place, which they haven't really used, but anyways, it's still in place. They're way too undervalued. They don't want to dilute at 55. So if you're trying to fundraise, but you don't want to issue new shares at the market, how do you do it? Well, a solution, a better way, is to use convertible bonds. So they issued convertible bonds. When you issue convertible bonds, you pay back the bonds, i.e. you're going to roll over the debt if the share price is below a certain amount. But if that share price at the maturity date, if that share price at the maturity date is past that amount, then the shares will convert. The bonds, will convert into shares. The bonds will convert into shares. So the maturity is May 19, 2028. In May 19, 2028, the bonds will convert at a value of $70.67 per share. They will convert at that value, that is a 37% premium over 51.40. If on May 19, 2028, of course, we trade below that, I hope not, but if it were to be the case, then HIMS would likely just roll over the debt as is usual in company, in enterprise debt, right? In company money. They are paying 0%. They're paying 0%. Why are they paying 0%? Because convertible bonds are just an implied call option that is sold by the company. It's essentially the company selling a call option to investors. And it's worth noting that HIMS was smart, as you know, some financial engineers are smarter than others. They were pretty smart in the sense that they are using some of the proceeds of that money to buy capped calls at $89.97, which means that the dilution will not exceed $89.97, which means that if you convert, and let's say the price of HIMS is $150 when the shares convert, that conversion will be capped at $89.95, and they don't do it directly, right? They just bought the calls, right? They just own calls in order to cap the transaction on their end, if that makes some sense. This is very similar when in options someone does a call credit spread. If you do a call credit spread and if you buy like deeply out of the money calls, they cost next to nothing. It's very smart for them to cap out that gain at $89.95 for the buyers of the convertible debt. So, you know, it's fairly interesting for everybody. And they're paying 0%. And they have the cash right now. And that's very cheap debt, borrowing at 0%. And I think what's worth noting is they upsized the offering. The offering was supposed to be $450 million. The demand was so high that they almost upsized it to near $900 million. So there was almost twice as much demand for these convertible bonds as there was offer. So convertible bonds were in very high demand, and that's why they borrowed so much money at 0%. And there's $870 million worth of money who's willing to get 0% interest in the high rate interest environment that we live in, because they think that HIMS will be worth more than $70 a share in 2028. They're okay doing that. And they want it so hard, they want to buy so hard that they want 0% interest rate. With these convertible debts, sometimes some of these are so oversubscribed, you got to wonder whether companies could issue them at a negative interest rate. I believe they will be able to do that soon in general. That's kind of my take as to where interest rates are headed. I know a lot of people disagree with me. A lot of people think interest rates are going to stick to 5%. I think there's no way. I think we're going to go back into a negative interest rate environment. That's a tangent I'm not going to go into today. Funds. Are the funds a good thing? Well, it depends, right? If you're a struggling business, raising money is typically a really, really bad idea. If you're an okay business and you just want to do a huge acquisition, or even if you're a great business and you want to do a huge acquisition, raising funds is a really, really bad idea. In the case of HIMS, racing funds, in my view, is a really good idea because they are a company that is growing very fast. And by very fast, I mean 100% plus a year. And so they have a use for that money, and if you read the statement, they're not even going to spend it on marketing, right? This is all development money. The marketing is self-funded for the model, right? This is all new development, new product line money. And so my Bitcoin folks who know full well about dilution and how this works, of course, diluting to buy Bitcoin is a good idea, but what's an even better idea, or an equally as good idea, is diluting to invest in a business that is growing sales at more than 100% a year. In fact, in that situation, I don't mind being in a fiat derivative because, of course, the growth of HIMS is more than outpacing the speed at which we print fiat, right? We print fiat at 15%. The growth of HIMS is 111%. So we're growing 96% in the case of this 111. So we are more than outpacing everything. We are well into hypergrowth. Dilution is warranted in this case. What about the use of the proceeds besides the obvious anti-fragility benefits, right? Having a war chest, like a cash, like a bunch of cash, that's useful from a competitive standpoint, right? You can do discount if you need to do discount. You can accept to take in less money if you need to do that. You can do a campaign if you need to do a campaign. You can pay that more money to hire that engineer that you really need. There's a lot of benefits from having a lot of cash, which is they make you anti-fragile. If there's an issue, the cash allows you to bounce back. This is especially because the cash costs nothing. It costs HIMS nothing, right? If the stock overperforms, it definitely costs HIMS nothing, and it will still earn the yield of a Powell yield, the Powell bluff-induced yields, as I call them, because we have a stubborn head at the Fed who thinks the yield should be as high as they currently are. So, anyways, I think that's a very good idea in the case of HIMS to do that. Now let's talk about the use of proceeds. So general corporate purposes, right? That's the typical lingo. Everybody says that, but there's more stuff. So global expansion is the headline news, right? The headline news, we're all saying, this is to fund global expansion for organic growth and strategic acquisition. The Tribe acquisition for HIMS was a really good one, right? They paid it for cheap, right? That was a good one. I would hate to see HIMS, doing a very expensive acquisition, right? If for a company this size, if they were to do $1 billion acquisition, I would be wary about it. I would pause, right? If they do small acquisitions, that's perfectly fine, and just put it into the business, do very small acquisitions, kind of like Google did back in the day, Facebook with Instagram, etc. These were all small acquisitions. Organic growth is, of course, the gold standard, and it's much better if they do that. I really hope they do that. They want to invest some of these funds in the technology team, and we know they're going all in on AI, and for the AI, they got to build the stack in the back end, and that's the data pipeline, that's the AI tools, that's the recommender system, and that's the personalization system, and the rest of the proceeds, just a tad of these proceeds will be used to buy the capped calls in order to not be too diluted, where the stock go absolutely parabolic, right? If the stock is at $200, you don't want to be diluting at 70 when the stock is at 200. That capped call transaction in there is very wise. So in other words, to answer your question, do I love it? Yes, I love it, right? This is a very good idea because your top line is growing at 111% and you're borrowing at 0%. So you're fueling the growth with this investment and with this debt, right? And so I like it very much. Anyways, this was not investment advice, not financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me next. Thank you for watching and have a wonderful, wonderful day.